Hello and welcome to our continuing coverage of what has been described as Black Monday across the globe, where markets have tanked, fearing the repercussions of US President Donald Trump's reciprocal tariffs that he has put across trading partners as well as foes as well as friends. Here in India, the benchmark BSE Sensex plunged 2,226 points or 2.9% to close at 73,137.9, while the broader NSE Nifty 50 tumbled 742.85 points or 3.2% to 22.161.6. As I said, this is because of the global markets reeling under the pressure from Donald Trump administration's intensified tariff offensive. We must also remember that China last week retaliated with a like-to-like 34% on what US President Donald Trump had announced. I'm Kunal Shankar, Deputy Business Editor, joining you from the Hindu's Chennai studios. I have with me Lalatendu Mishra, who is joining us from Bombay, who tracks the stock markets closely and has been doing so for the Hindu for about close to a couple of decades. We also have Saptarno Ghosh, who's joining us from our Delhi offices to make sense of what has just happened across the globe, really, not just India, and in fact, far worse in Asian markets, which is Japan, South Korea, and not so much China, but China as well. So if I can first go straight away to Lalatendu. Lalatendu, we were in fact speaking a little bit earlier. We'd spoken about this in the morning as well. We touched upon it in the morning as well, about just what this means, particularly to retail investors. We have reported on this in the past months or so, ever since this volatility in the markets began with the re-election of Donald Trump back to the White House, about the sort of retail investors really leaving the markets in droves, those who had sought a bit of higher disposable incomes, if you will, post the COVID-19 pandemic, and that seems to be now ebbing. So, if maybe we can begin with that conversation, because I think our viewers and readers would really sort of want to know what this really means to their cash, to all of those savings that they have put in these markets, right?
Yeah, Kunal, hi. Good evening, all viewers. As you said rightly, this has been devastating for retail investors who came in hordes, post COVID. As you know, the Demat account numbers have gone up from about 4 crore to 14, 15 crore. So they're all retail investors. If you go to any company's website to find out what the number of retail section is right now, that has gone up substantially. And
Right.
for the last 4.5 years, continuously, these retail investors, they have never seen a fall in their life. They were,
Right.
every day is a new day for them. And so much of money they are earning, greed overtook the investing decisions. And
Right.
when markets started falling from September onwards, they
Yes.
did not
Last
get
September.
any lesson. They should have booked profit that time. So most of them, they have not done that. And what
Okay.
happened when the market corrected? They went on averaging. Once you
Right.
average, you put more money from your pocket, waiting to see that whenever these stock prices. I was talking to some analysts. Stock prices have fallen by 1/3.
Right.
So when
Right.
you buy a share at 2,000 rupees and now it has come down to 700-800, you cannot do that. You are struck for life.
Right. Right.
So though the impact would be different from different segment of small investors or retail investors, it is very overall is very cascading on them.
Yeah. So, I mean, just to give a sense of what's happened here at the Bombay Stock Exchange, of the 4,225 stocks that are traded on the BSE, 587 advanced, 3,494 declined, and 144 remained unchanged. As many as 59 stocks touched 52-week highs, while 775 of them hit 52-week lows. So it's really quite a bloodbath that that you've sort of pointed to, Lalatendu, and also maybe if we can just also talk about which are the main sectors that have been hit a little, because last week we actually saw pharma doing a little better initially when Trump announced those reciprocal tariffs, but then it sort of tanked again once he threatened a second set of tariffs, which might actually touch upon pharma. So we have a little bit of sense of which are the main sectors? I do know that all the 13 sectors have been hit, but do we know which ones most and which ones less? And do we have a sense of that?
So just giving a sense of what the Sensex 30 share Sensex, only one stock, that is Hindustan Unilever, gained by 0.25%. Rest all are in the red. Okay, it
Right,
started with Tata Steel, then L&T, which is heavy machinery. Tata Motors sank by about nearly 6% when news came that JLR has halted the exports to the US
right,
because the US is their largest export market. Then banking stocks also got impacted. Mahindra and Mahindra Auto got impacted, and Infosys. So the impact is across the board. And the small and mid cap stocks suffered more losses than the frontline stocks. So
right.
most of the retail investors, who can afford a Reliance or something, uh, they were trading through tips, and now the people who get tips have vanished. So these people are struck. They don't know what will do. And another question, that whether they will still keep investing or not. People who have really lost all their money will not return to the market. They will not exit the stocks
That's
because they'll become penny stocks. They will be there. And when the market regains, revives, it's not that the stocks that are doing well in the good time will be doing well again. So that is another cash 22 position they will be in.
right, right. To also just give add to this, Zomato, I think aside from Hindustan Unilever, Lalatindo is the only other one that joined the green territory. At least around 3:30, this is what we have reported, that food delivery app Zomato joined FMCG company Hindustan Unilever in the green territory as trade was nearing close today. So, as you said, across the board, really quite a bloodbath. And that was the most important takeaway from what we'd spoken. I felt that retail investors, people like you and me, salaried class, who have wanted to get more from our savings. We've traditionally, by our parents and several generations who've sort of guided us to invest in very safe haven public sector banks for interest rates. We took those monies out, or we and put them in the stocks. There has been a trend, and in fact, what appeared to have been alarming for RBI and the finance ministry, that liquidity in banks have actually come down because a lot of us have actually not been putting our savings in the banks. And they've, in fact, attempted ways to get that going. So would this be the sort of the incentive for us, or for a lot of retail investors now, to say, hey, look, probably all our folks were right, we need to just head back to the public sector banks.
This will not happen, Kunal, because the amount of return you get from the market is just like your intoxication. Once you get hooked into it, and the amount of return you get it, I don't think many, maybe out of the 14 15 crore investor, 2 crore will go. And
Right,
another interesting thing that has happened is that earlier the stock investing culture was only confined to maybe in some good places in South India, Western India, and Gujarat. There people
right.
used to invest on Rajasthan. Now you will find a lot of people from UP, Madhya Pradesh, Delhi, NCR. They are investing in. Their number is coming in large. So I don't think this is a setback, definitely, but market will
Yeah.
find its place one day. Maybe they will start afresh. Bulk, some will go. As I said, say out of the 14 15 crore, 2 crore will go. More will be coming. So no safe investment will compensate the higher return that people get. maybe they have not learned a lesson. They should have booked profit before September rather than waiting for this period to cry over it.
Right, right, absolutely. So it's and I think if you speak to most of the fund managers, you speak to your own financial manager, they tend to tell you that these investment plans, these SIPs, are always a long-term return strategy. They speak of how it's really a retirement strategy. It's not something that you might have to you think of encashing immediately, and market corrections are part of the game. And the only thing that they tend to sort of tell you is diversify your investment, maybe put some of it in bonds, maybe put some of it in gold. There's also these ETFs that are coming up now, maybe even put some of it in FDs, but don't ever get out of the market. So that's a very interesting insight that you just pointed out. I'm just going to get Saptarno also on the line here from our Delhi office. Saptarno, you've also been tracking all the markets from the morning, handling the lives for us here at the Hindu quite ably. So why don't you walk us through what you've been noticing as trends from Asia? You did so in the last live, but maybe you can give us a recap of what's just happened. Now I would understand most of the Asian markets would be closed, and so maybe we can make a better sense of exactly where we are today.
As far as Asia goes, Kunal, I mean, it is a continuation of what we had expected this morning. I mean, it is largely on those lines. If we look at Nikkei 225, I mean, it declined. And I mean, the fact is that it closed at the last time I said that it was nearing a 52-week low. Guess what? It
Right.
has fallen. It has breached that as well. So it has closed at a, I mean, 16-month low now. So I mean, and also these lows are happening in Shanghai. I mean, in all other indices across Asia. So it is largely on those lines. And obviously, I mean, if you look at the exposure that I mean these the constituents in these indices would have, you'll actually get an indication of why this entire paradigm is happening actually. And other
Right.
than that, I mean, Kunal, I mean, one of the most significant things, I mean, that would pan out later in the day would be from Europe. So
Right.
stocks, right? So stocks, STO,
That's right.
triple
Right.
X, right? Yeah. So the fact is that it is nearing those levels that were attained. I mean, those lower levels that were attained back during the pandemic, and when
Yeah.
at the onset of the pandemic. So these are very scary levels, and especially bank stocks because they reinvest in the supply chain that has exposure to the US. So that
Yeah.
is happening, and that is the most scarier part. I mean, if you look at the European economy, it has been, I mean, I mean, on and off, right? I mean, sometimes you find it very balanced, sometimes you find it struggling with inflation and all of that. So this is something that bodes out to be more scary. And
Yeah. Yeah.
I mean, if you look at things back home now, I mean, Lalatendu spoke about it, about, I mean, there's being only one constituent in the BSE 30 that ended in green.
Yeah.
Zomato, I mean, all of a sudden it was in the last 15 minutes that you were expecting, oh, Zomato is going to be the second one. This might actually be very good. But then the rally, I
Yeah.
mean, did not really help it.
Yeah. Yeah. Right. And as you said there, we the day isn't really over because Europe and I think probably the US stock markets open now.
US. Yeah,
Yeah.
US is in pre-market trading right now, Kunal. And
Right.
I mean, it would open later in the evening today, that is Eastern time. And
Eastern time. Right.
yeah, so I mean, the fact
So
also
we have
remains, I mean,
yeah, no,
sorry,
so we have some ways to go to really gauge the day more. It's close. It's close,
particularly tech, Kunal.
particularly tech. That's right. And that's something I think one of the observations by experts has been that this is really a lesson, maybe perhaps for the tech sector, because Nasdaq, which is really tech heavy,
Okay,
has
okay,
taken quite a heavy beating. And it's interesting because these tech companies have been doing phenomenally well, regardless
absolutely.
of the stock market volatility ever since President Trump came to power. Nvidia, in particular, has capitalized on trillions and trillions of dollars. Um, we have we have so many other companies in the United States which has been booming mainly on the back of technologies like generative AI and several other cutting edge technologies which have really captured the imagination globally. So it'll be interesting to see how. I just wanted to get back to Lalatendu for a quick conversation on what this means to the macro economy in general. Does this, Lalatendu, mean that there's a sentiment of less cash in the hands, at least temporarily, when you have when you experience such volatility? You don't necessarily even quite know what you have and what you don't, right? It's the interesting thing about markets is that it's only a sense of valuation. So you might actually be having enough disposable income, but it might actually be a psychological barrier from you to be spending it. So do we expect a sort of a demand contraction given this volatility on top of inflationary demand contraction that we may face as the April 9th import duties kick in globally?
Yeah, it is very difficult times, Kunal. And it'll be a tough time to the policymakers to decide what they have to do. And the credit policy is coming in 2 days. They have already
Right.
started.
Yeah. The Monetary
The
Policy
meeting has
Committee is
started.
going
The
to.
monetary policy on 9th. There are a lot of expectation that they will get cut. And obviously, during uncertainties and this trade war is creating more trouble for both the local economy as well as the global economy.
Right.
So obviously things are going to be difficult.
Yeah. Yeah. It's too early to say just how this is going to affect all of us, isn't it? Yeah.
Absolutely, because nobody knows how long it will prolong, and
Yeah.
the retaliatory tariff that has been imposed. There is thinking that China will devaluate its currency.
It's
When they
currency.
do,
Right.
we will devaluate a currency. We don't know how negotiation. There are a lot of expectation that trade negotiation take place. Government of India has already made it clear that we'll do whatever we can, but we are not on a begging bowl before America. So
Right.
things are very difficult. It started with COVID, very uncertain time. Then the Russian war happened with Ukraine. Then the Israeli Hamas strike that happened, and now
Yes.
this is totally global. And what America created so many years back, the global supply chain, that they themselves are dismantling it. So
Yes.
all
That's
this thing creating a lot of disturbances, dislocations. And I was told, it takes many years, decades to establish or realign supply chains.
absolutely. I think we've sort of written about this in our editorial. The sort of neoliberal agenda which was brought in the 70s and 80s with the United States refashioning the Bretton Woods institutions when they began seeking more market access for their own goods. And at that time, the United States was clearly the dominant exporter, also the dominant technological powerhouse of the world. But that position has really reversed, isn't it? I mean, we our editorial spoke about the fact that the largest trader today is actually China with about 14% of the market share, and US, which used to be about 14 or 15%, has actually dipped to about 10%. But more importantly, the sort of tech heavy exporting, like these EV batteries, semiconductors, all of what is required for data centers, etc. They're really now being done by China, South Korea, Taiwan, Japan to some extent. It's not really the United States. In fact, the United States and Europe are largely importers. So I just wondered. There's a report that I was in fact just reading a little earlier about the lack of confidence that is possible on the dollar, the US dollar as a reserve currency, particularly now because many people just around ahead of the announcements by Trump went back to the US, particularly from emerging markets like India, where they just drove out in droves and then put back money in the US. But now the value of their markets there have crashed. So it really is uncertain times. And I mean, how do as you said, how do we really make sense of this? And would this be reflected in the RBI's Monetary Policy Committee's ninth announcements?
Nobody knows, Kunal. They are also waiting and watching what the Fed is going to do. It's a tight rope work, actually. Many analysts have said that, they will cut interest rate by 0.25%,
Yes.
to have, more activity in the market. But really, you don't know. And Hindu, we're not into forecasting game.
That's
We will report what they do. So really, I have no idea what they're thinking. And this is a very closed door meeting, so we don't know.
Yes, that's right. Yeah, yeah. Although there is an expectation that that
Yeah.
0.25 basis point cut would still come through.
The
I think with
expectation is that he will do it about 1% over a period of time. So how much he will do, we have to wait and see.
Right, right. So on that note, clearly greater uncertainty, not just for India, really for the global market at a time when India is very interconnected globally, financially, and in economic supply chains, unlike in the past market crashes. Even, for instance, 2008 market crash, the financial crisis that happened in the United States. So most certainly uncertain times, and here at the Hindu we'll be tracking all of this closely. As my colleague Saptaparna pointed out, the European and US markets would have just opened, and we would get to know a better sense of just how badly this Black Monday is going to pan out to be. But right now, that's all we have for you from here at the Hindu in Chennai. Thank you and bye for now.